that's about it. So we'll start here. I was going to show a map like I was mentioning before.
Oh, there you
And
go.
for whatever, if whatever reason, I guess those Google Maps weren't really working. So first of all, Canadian National Rail, about 25,000 employee. The CEO is Tracy Robinson. She's been in place since February of 2022. For some additional context, she became CEO after Jean-Jacques Ruet retired following the failed attempt by Canadian National Rail to try and purchase Kansas City Southern, which eventually got purchased by CP. And again, he retired, but it was kind of clear that there were some shareholders that were very unhappy with the bid because they knew that it would never get approved in the US from a regulatory perspective. Their network is just absolutely massive. Same thing for CP, as we'll be showing on the other map. So it spans from east to west in Canada, goes up north, especially more up north. It does go up north for Quebec, Ontario, but especially Alberta. It goes way up north here and all the way up to Northwest Territories. And then in the US, it does go there as well. So it goes all the way from kind of I would say, best way to explain it, from the Great Lakes all the way to the Gulf of America, but I'll just still say Gulf of Mexico because Trump changed the name. I wasn't sure. And it actually says on the
says
map
Gulf of America.
Which I don't know. I've always, for me, it's like an automatic. It's Gulf of Mexico. But anyways, so rant aside, very extensive rail network. Even if you look at the map and you see the other networks in the US, you'll clearly see that the one from CNR is very expansive. So that's an overview of their business, bird's eye view, and also the network. And then I'll let you go over CP now.
Yeah, so I think on the visual here, CN is the red, and then I believe
CN
CP
is the red. That's correct.
CP is like the copperish looking color.
Yeah, it's very hard because it's like kind of overlaid, so that's why. I didn't specify. CNR is the red. It's the most visible one.
CP will be like that copperish color, and now the blue, obviously, now that they have Kansas City Southern, and I think the main reason the CNR acquisition failed is they already kind of had a railway going down that corridor, and it whereas CP really didn't. So they were able to kind of make that acquisition, whereas CNR had some difficulty. But CP, 20,000 employees. They have a little fewer employees, but they also have a larger market cap now post-acquisition. Keith Creel has been the CEO since 2017, and after the acquisition, CP Rail owns the only single-line railway that connects Canada, the U.S., and Mexico. You can kind of say that, the bulk of CN is kind of east-west, whereas now, after this acquisition, CP has a lot of north-south capability there. And, go ahead.
No, I was going to say it's very expansive network as well.
Yeah, it's gigantic. So prior to the acquisition, CNR was the bigger railway, but after the acquisition, they're pretty similar in size. That acquisition kind of materially shifted CP. It was huge. I think it was a $41 billion acquisition. It's they definitely got a different look for now.
Yeah, for sure. It's they're two like pretty impressive railways in terms of network, and maybe in terms of, before we get into the financial metrics, and maybe it's good to talk about the competition here. We didn't have exactly in that order, but in terms of competition and risk, I think some will overlap for both. So for Canadian National Rail, obviously they are competing with CP on many routes. Like, they are competing with them on a lot of routes. They also have competition from the trucking industry. Like Alain Bédard said, the CEO of TFI International a few months ago, the trucking industry is definitely in a freight recession right now. So I would not be surprised if they're trying to put some pricing, some better deal on pricing to try and retain some of that business, which could put some pressure on the railways whenever it's an option, whether using trucking or railways. But the reality, if you're thinking about railways, both businesses have massive moats. It would require, I've said this before on the podcast talking about CP and Canadian National Rail, it would require massive investments just for a new entrance to build that same kind of network, just on a sheer money basis. Just think about the billions of dollars that would be required. But then, like we referenced for Canadian National Rail's failed bid to buy Kansas City Southern, you also need regulatory approval. And we've
Yeah.
seen in Canada with pipelines, also in the US, you need regulatory approval not only on the federal level in Canada and the US, but you also need it on the provincial and state level. And that's not always easy to get. Sometimes a lot of, in Canada, provinces will disagree on whether they see the value in an infrastructure project or not. And even for, in terms of rail still, and I know you added some comments
I
here.
mixed up the notes.
Yeah, you mixed up the notes. So that's kind of my big note, kind of big takeaway here. Do you want to add a few things? I think I'll make a bit more sense here.
Yeah, so I just kind of want to mention that, like, even if you think about the moats, like even for a standard flat railroad track, you're talking about like millions of dollars to build it. So I mean, once you factor in the actual locomotives, tracks running through bridges, cities, like even if it's not a basic slap of flat track on a piece of land, especially the land. I mean,
well, yeah. Keep in mind too, like you'll probably have to do use some explosive to get through areas, like just the sheer amount. Yeah, it's just crazy. If
it's
people
borderline impossible. I mean, nobody's going to replicate the network. So now the thing is, I mean, when you think about the moat, like a lot of people say, you should buy companies with strong moats. I mean, the market, in terms of valuation, the market knows this. I mean, it's not, it's very well known that, these networks are, I would argue, impossible to replicate. I mean, nobody's going to lay out that amount of cash to try and compete with this, which is why, in terms of growth of network in the railway space, it's often through acquisition, and there's also like very few acquisitions because there's so few players in the space. Rail, again, just continues to be a dominant method of shipping. 40% of the country's overall freight. I can't remember if this is in the US or just North America in general, but I mean, railway is still like the number one way, especially when we think of like commodities and stuff like that. I mean, you're not really going to truck a lot of that stuff. It's mostly going to be moved by freight. And another interesting comment is back when Buffett acquired BNSF Railway, he had mentioned that it was not an investment for a decade or two down the line. Like he said, this railway will still be around in 100 or 200 years, because it's just, you can't really think of another logical way to move things across the country, outside of a a large railway. Especially, again, trucking is so inefficient depending on what you're shipping that I don't think they'll ever be replaced. They don't really have any sort of dividend strategy whatsoever. They never really have. I mean, there would be times pre-pandemic where they would kind of raise the dividend for 2 or 3 years and then stop and then do it again. And then leading up to the Kansas City Southern acquisition, they kind of halted dividend growth again. Their priority over the last few years, or actually I should say the last decade, has definitely been buybacks over dividends. So leading up to that Kansas City Southern acquisition, the company had bought back nearly 25% of its shares outstanding from 2015 to 2021. And I'm not sure if you can pull up this chart on the notes there of the buybacks versus the price. But you can see CP Rail here, large amount of buybacks leading into 2021 when they made the acquisition, and then they effectively stopped. Whereas, a ton of these buybacks were made when the price was, I mean, some of it, $32, $40, $50, and now we're sitting at, $95 a share. Whereas if you scroll down a bit to the CN Rail one, CN Rail really ramped up the buyback activity in 2022 and 2023, when you could say that shares were, I wouldn't necessarily say they were cheap there. I mean, we were in the complete opposite of a freight recession. We were in a freight boom because of the pandemic, like skyrocketing oil, like the shipping, just digital shipping from all those lockdowns and stuff. So I mean, one looks to have made very timely buybacks and not really focused too much on dividend growth, whereas the other one has kind of been really aggressive on the buybacks and the dividend growth over the last while, and it hasn't necessarily worked out all that well for CP Rail, for CN Rail, while CP is they've done quite well. It's been a very good use of capital, I would say, over the last while.
Yeah, for CPN, definitely. And that's the issue with Canadian National Rail, CNR, is just why wouldn't you give yourself the flexibility? That's always what I come back to, is pay down that debt, pay less on the interest expense. And you know what? If down the line your debt is like at a pretty, very manageable level, we don't really enter a recession, things start picking back up, the business just starts booming, then, return money to shareholders, increase the dividend, pay a special dividend, buy back some shares, combination of all three if you want. It just, long term, it's the right move. And that's what like really annoys me, is when I see management team with businesses that are geared towards the long term. This is the type of businesses that span not decades, centuries. Yet they're looking at things as if it's only the next 1 to 2, 3 years maximum. And that's what I really do not like about this management team. Is, to me, it's a no-brainer if you're a long-term manager. And honestly, long-term shareholders will actually be benefited way more if you get that balance sheet in order, you pay down that debt. But clearly that's not what they have in mind, and obviously the board is on board with it, no pun intended.